Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, with Greece temporarily off the agenda, I suppose markets are looking at two big factors, China and the US. Now, over the weekend, we had further evidence that China was slowing down, and that is impacting across the commodities complex again. We've got the exports from China dramatically missing expectations over the weekend, and also producer prices as well. And that certainly has fed into, or continues to feed into, this argument that commodity prices on the decline. You've got oil prices, metals prices, all falling away, which is having an impact across markets generally. And also we've had this non-farm payrolls report on Friday, which for the States was solid if unspectacular, but also continues to sort of reflect on the market's increasing expectation that September could be the month that the Fed moves on rates. I don't necessarily subscribe to that view. I think that inflation needs to be seen, and I think that gives the more dovish members of the committee just a little bit of an excuse to just hold off for the maybe until December. Certainly members such as Jerome Powell continue to sit on the fence and sort of look at this data, and I think that we're not necessarily getting enough feed through into the inflation, certainly with the average earnings still unspectacular, and I think that is going to give them an excuse to hold off. But certainly the market seems to be subscribing to possibly a different view, because if you look at the yield curve, you've got a very interesting shape of the yield curve developing here on the US. We've got at the long end of the curve the yield curve dropping away, which I think reflects the concerns over future growth, and also at the near end, shorter end of the curve, you've got the rising yield curve, which I think reflects the increasing expectation on the potential September rate hike. And this is impacting on a stronger dollar across the Forex markets, which if you look at euro-dollar, I think euro-dollar is continuing to show you've got a series of lower highs, you've got a consistently selling into rallies, and I think that's continuing to put pressure on those key lows from the May and July lows of around about 108.10 on that euro-dollar chart. So continued selling into strength there. Now, sterling dollar is an interesting one, because you've had in the last week, you had Mark Carney coming out with a bit of a dovish outlook for the sterling, so that sort of pulled the rate lower. And also, I think with this solid payrolls report on Friday, that continued to means that the downside pressure is on cable. So it's putting pressure on the initial support of 54.65. If you see a close below that, I think we're going to be coming back towards 53.30. Now, dollar yen, similar sort of game actually. You've been trading sideways, but it's starting to, or had started to break out. A little bit of a correction on Friday, but I think the bulls are back in control on Monday morning, and I think they're going to continue to pull higher, back above 25 figure, and I think they're going to then push towards the 25.85 key resistance. Now, indices are, or equity markets are a very interesting factor at the moment, because we're seeing the commodity prices feeding in. Anything with big exposures to commodity markets is having a significant impact on the indices. You've got the likes of the DAX, which is outperforming because of a low exposure to basic metals and resources as well. So that's why you're seeing the DAX outperforming. It's actually holding on pretty well. The bulls are just clinging on still. And I think it could be that if they get control this week, you could well see further upside pressure on the key resistance band between 11,640 towards 11,920. So that key band of almost 300 pips or ticks worth of resistance there. Now, the S&P 500 has been dragged by, as I said earlier, the exposure to the energy markets. Also, earnings season hasn't really done a great deal. You've seen a lot of quite middle of the road results. Also, earnings outlooks coming under pressure from the stronger dollar as well. So this has put pressure on earnings season in the States, and that's why we're seeing the S&P 500 not really being able to gain much traction. And it certainly needs to now hold on to the support again around the 2040 towards 2060 area. FTSE 100, big exposure to commodities and oil stocks. So that's why we're seeing the FTSE 100 being dragged again. It seems to have rolled over again underneath the 6,800 resistance, and it looks to be falling away. If it breaks down below the 6,645 key near-term support, you could see it pull back towards 6,500. Now, in terms of the commodity markets, we've seen oil under pressure, continuing to fall away. And also the interesting fact is we're now seeing a bit of support coming in for gold. Whether it turns out to be any base pattern or not is yet to be determined. I do not think personally it is going to be a base pattern. I just think it's going to be just a consolidation pattern that unwinds some of this oversold momentum that's built up in gold recently. But certainly the gold price needs to continue. But well, basically it's going sideways, and if it continues to trade underneath the 1105, 1106 resistance, I think that continues to be to show that this consolidation is intact, and I think ultimately it will break to the downside. So across the markets, what are we looking out for this week? Well, we've got the German ZEW economic sentiment, which economic sentiment this week, which is a big factor for Germany, and that could have an impact on the euro on Tuesday. Then on Wednesday, we're looking more towards, once again, China. The industrial production numbers, certainly after those weak export numbers, industrial production becomes increasingly important for China, and the near-term sort of sentiment around that trade. And you've also got UK unemployment, all those unemployment figures that come out with also average weekly earnings, which average weekly earnings in the UK have been strong, and another strong number could well see their cable or sterling start to find support again after a bit of near-term weakness. Then on to Thursday, the key data we've got to account for this week is the US retail sales, which have been disappointing in recent weeks and months, and you need to start to see that man on the street buying and spending money and supporting these retail sales data, because you'd need to see that filtering through, because it certainly is a bit of pressure on the consumer discretionary stocks in the US. And on to Friday, we finish off with a couple of key bits of Eurozone data with the GDP and CPI data, but then we look also at the US Michigan sentiment as well. So there's quite a bit going on this week, still looking out for a lot of data to drive these markets once again, but again, focus on China and the US. And I wish you good luck in your trading, and I'll speak to you again next week. Thank you.